The financial sector, it's one of the most influential groups in the market. And today, some of the country's biggest banks showed that business is okay. Maybe not great, but okay. Earnings from Wells Fargo, JP Morgan, and Citigroup all beat Wall Street expectations, but profits were down across the board year over year. That was enough to lift the broader market, but not shares of all the big financial institutions. And that's partly because questions still remain about the fourth quarter. And of course, a lot of attention was on embattled Wells Fargo, which said customer traffic at branches was down in the wake of the fake account scandal, and fewer checking accounts were opened.
It's gutless leadership.
During John Stumpf's final quarter as CEO at Wells Fargo, profit dropped more than 2.5%. But the earnings news at the nation's third largest bank wasn't all bad. Despite charges, the bank opened as many as 2 million accounts with either fake or unauthorized customer information. Profit was still higher than expected, and revenue rose more than 2%, also more than analysts predicted. The after effects of the sales scandal, a $185 million settlement, and Stumpf's ouster are still to be felt. New CEO Timothy Sloan is already looking at reduced business at Wells Fargo bank branches.
The implications for our company and on the trust of our customers are significant. Customer visits with bankers in our branches, a subset of overall customer traffic, were down 10% in September compared with a year ago. The lower level of interactions in September was driven by lower internal referrals, decreased product offerings, and reduced marketing.
JP Morgan Chase said on its earnings call that it too has identified problems with its employees cross-selling, but that it does not think the problems are systemic. The nation's largest bank said both profit and revenue beat expectations. Profit was down from a year ago, mostly because of a one-time tax benefit last year, and revenues were up more than 8%, in part because of equity trading fees, up by a third. And its investment bank had a record quarter, with fees jumping 15%. Fixed income trading was also up a whopping 48%, thanks to a rush of activity after the UK's June Brexit vote. Citigroup is recovering from past legal scars. It too saw jumps in trading and investment banking revenue. Overall, Citigroup's earnings beat forecasts for both profit and revenue, though profit was down 2% from a year ago and revenues were down 5%. Still, investors tend to smile when earnings reports beat forecasts.
The reports have all been positive. What we are seeing is that the money center and the capital markets revenues are really pushing Citigroup and JP Morgan higher. We are seeing the momentum of the overall just markets, and the activity we're seeing there should rise all tides for all these money center banks today, and then next week we see further releases.